Very good evening, my dear friends. Welcome to our Patron live sharing class. I hope everyone have enjoyed your Christmas holidays with your loved ones. Once again, it's my pleasure to be able to share with everyone here again. I hope everyone in my class are able to follow up with my sharing and able to fully understand the materials I prepare for everyone. Please also take some time to read up again if you have doubts, and also put the materials you have learned into practice, because practice makes perfect. I sincerely hope I can help everyone here in my class to earn more and achieve financial freedom. As for today, I will continue to share more MACD trading techniques with everyone, which I think is very important for everyone to know how to use these techniques. These techniques is able to help everyone to have a clear understanding about how to read the charts. Besides sharing trading techniques, I will also continue to scan for more profitable high quality stocks, share market analysis, and guide everyone to a brighter future. Thank you once again for everyone's support. Okay, friends, let's take a look at the content for today. What we will be covering. So today we have 5 contents. Okay, we start off with market analysis. Okay, let's move over to the overall stock market for today. We'll start off with Nifty. Okay, friends, let's take a look at the trend of Nifty index. Objectively speaking, looking at the daily candlestick charts of the index today, the trend is relatively smooth upwards. Okay. However, from the intraday perspective, today's rise was mainly concentrated in less than 2 hours in the morning, followed by a continuous oscillating trend. From an overall technical perspective, we can clearly see the change in the pace of the upward trend from the previous accelerated rise to the current oscillating rise. In fact, this change in pace is a good thing, because a continuous accelerated rise is definitely not sustainable. While oscillating rise can digest different opinions within the market. We also notice the following internal aspects. For point 1, the Nifty index has risen for 3 consecutive trading days and has entered overbought territory in the short term. 2, today's high level rise is accompanied by a decrease in trading volume, indicating a temporary calm in the market, maybe due to Christmas and upcoming New Year's in the European and American countries. And for point number 3, at the same time, we also observe that MACD indicator on the daily chart is approaching a bearish crossover, okay, which is over here. Okay, but it has not yet occurred. When this situation occurs, there are usually 2 trends. Either the price start to decline, or the price oscillate at high level. So overall, the trend of Nifty index remain relatively strong, but there should not be a significant surge in the near future. It's more likely to maintain strength at high level. And as for the price retracement, either it will not occur or it will test the support level below. Okay? Okay, let's move on to Sensex index. Okay, let's continue to take a look at the chart of Sensex. The chart is roughly similar to the Nifty index. with a similar slowing down of a upward trend. Okay, slowing down. The low of the 13th and 21st trading day will form a new trend line, providing support for the short-term price trend. This upward trend line will be an important measure and judgment benchmark in the near future. In the chart of the daily trend, there are current basically no adverse factors. The real adjustment demands occurs in the 1 hour time period. At present, in the 1 hour chart, there has a divergence in the indicators. I will explain this knowledge to everyone in a later session. But remember, any indicator is an auxiliary analytic tool. And the importance of a candlestick chart themselves is greater than any other indicator. After seriously and comprehensively in-depth studying of candlestick charts, you will be able to deeply appreciate this point. Okay, returning to the Sensex index itself, the high point of the 20th will become an important resistance level in the near future, while the newly formed trend line will serve as a support line. Next, the index will mainly fluctuate at high levels. Okay, next topic, macro analysis. Based on the data from the Reserve Bank of India, which is RBI, as of December the 15th, India's foreign exchange reserve have risen for the 5th consecutive week, reaching a 20-month high of 615.97 billion on Friday. After a cumulative increase of 16.5 billion in the previous 4 weeks, foreign reserve increased by 9.1 billion in the current reported week, throwing a net inflow of 2.9 billion into India's debt and stock markets in November. The net inflow in December has reached 9.2 billion so far. Why am I sharing this data about foreign exchange reserve with everyone today? Because this demonstrates a further increase in the economic strength of our country, India. With the strengthening of the economy, can it provide continuous impetus of the stock market to rise? And moreover, the increase of foreign exchange reserve is beneficial for maintaining the stability of the financial system. In the event of external shocks, foreign exchange reserve can provide a tool to counter financial market fluctuation and maintain the healthy operation of the domestic financial system. With this assurance, should we still worry about some adjustment in the stock market? Of course, sufficient foreign exchange reserve can also enhance international confidence in India and help attract foreign direct investments. This shows a further increase in India's foreign exchange reserve, which also indicates a further strengthening of India's economic resilience, improving India's stability and competitiveness on the international economic stage. Currently, various economic data in India are developing in a positive direction, which is also a strong guarantee for the rise in the stock market. Okay, let's move on to the next one. Okay, in the November, the US saw its consumer price drop for the first time in over 3.5 years, pushing the annual inflation rate further below 3% and boosting market expectations of a Federal Reserve interest rate cut next March. We care about some of the economic data in the US mainly because this data can affect the timing of FED interest rate cuts, which not only impact the US stock market but also have global implications. Typically, a slowdown in inflation may lead the central bank to lower the interest rates to stimulate economic growth. In such a scenario, investors may remain optimistic about the stock market performance because lower interest rate can reduce companies' financing costs, enhancing their profit potential. A slowdown in inflation is also generally seen as a sign of economic stability, which can help to boost investors' confidence. A stable macroeconomic environment may make investors more willing to invest in stock market, thus driving stock price to go higher. In an environment of slowing inflation, investors may be inclined to allocate more funds into the stock market in search of higher returns, as bond yields may be comparatively lower. As stock investors, it's important not only to pay attention to technical patterns, but also to further focus on macroeconomic data, which can help us to be more precise directionally judgments. If we can make a clear judgment on a major trend direction, then the short-term fluctuations in the stock price are likely to adverse affecting our trading. Okay. Let's move on to classical tactics. In our previous live class, I shared some aspects of the MACD indicator with everyone. Therefore, I will continue to share more MACD related topics with everyone. In fact, since the MACD indicator is known as the king of indicators, there are definitely more methods and techniques for us to learn in its use. As I mentioned last time, I'll continue to share this content with you gradually. Today, we'll continue to learn about the usage of the golden cross and the death cross, okay, in relation to the MACD indicator. Some of you or many of you friends may think this is very simple. We all know that the golden cross means to buy or buying, and for the death cross means selling or to sell. So, if you all are interested in learning more things and improving your trading knowledge, please, I remind everyone again, be present for my class. And what I want to tell all of you is that if it is really that simple of buying and selling, then everyone will be a stock market expert. And everyone will have already achieved financial freedom. Okay? So, let's continue with the MACD. Okay, before I formally explain the golden cross and death cross of the MACD indicator, let's first take a look at these concepts. We do this because the golden cross and death cross concepts not only appear in the MACD index, but also in some other indicators such as MA index, and the KDJ index. Okay? The golden cross and death cross patterns are extremely important in technical indicator analysis. I say again, extremely important. Okay? Let's start with the golden cross. Okay, you can see I have shown two pictures, which is the golden cross. The golden cross refers to the shorter term indicator line crossing from below and piercing the longer term indicator line of the same type. Okay? From bottom to top. Generally indicating a buying opportunity for the short term. Okay? You can take a look at the chart. I will use the MA index and the MACD index. Okay, this is the MA index. This is MACD. As examples to share, you can see clearly that in the two charts, although the specific indicators are different, they both show a golden cross, which typically indicates a bullish short-term trend. Additionally, it is important to note that if the golden cross pattern appears after a consolidation of trend in an upward trend, after a short-term rapid decline in an upward trend, or a temporary low point during a downtrend, it is more reliable buying signal. Okay? Okay. Next will be death cross. Okay. Let's take another look at the concept of the death cross. Similarly, we use them in MA indicator and MACD indicator. Okay, we use MA. This one is MA. This is MACD. The death cross pattern refers to a shorter term indicator line crossing from above to below and crossing the longer term indicator line of the same type, typically indicating the emergence of a selling opportunity for short term. If the death cross patterns appear after a oscillating trend in the downtrend, or after a rapid short-term uptrend in an upward trend. Example, when the death cross pattern appears at a cyclical high, it's more reliable of a selling signal. For any index containing signals of golden cross and death cross, the meaning represented by the golden cross and death cross are the same, and their methods of use are generally similar, with at most some adjustment in practical applications. After understanding the golden cross pattern and the death cross pattern, we can specifically look at the golden cross pattern and the death cross pattern of the MACD indicator. Okay, for this, in fact, regarding the golden cross and the death cross, as well as the DIFF and DEA lines of the MACD indicator, we generally refer to the DIFF line and DEA line as fast and slow line. Okay, this one I introduced to you guys before. And this diagram is just to make everyone to be more clear about the various elements of the MACD indicators. However, the main point we will discuss tonight is not here. Okay? We need to take a brief look according to many friends' private messages. Okay? Some basic elements of the MACD indicator are not very clear. So, okay, let's take a look. In the MACD indicator, all the golden cross and death cross are formed by the DIFF line and the DEA line. Okay? And as I have marked very clearly in the diagram, you can see golden cross, death cross. This one DIFF and DEA. Okay? See? They form together. Everyone can see that the golden cross of the MACD indicator right here, there's a period of uptrend. Then when the DIFF line and the DEA line of the MACD form a death cross, okay, which is here, which is downtrend. Okay. My friends, the golden cross and death cross we talked about earlier are general principles and usage. There are many more advanced uses when specifically applied. Moreover, what's more important is that the usage of the golden cross and death cross in the MACD indicator may differ from other indicators. Okay, I repeat, may differ from other indicators. Okay. If the usage of the golden cross and death cross is so simple that you buy and when you see it, or when you see a golden cross, and sell when you see a death cross, and makes 100% profit, then everyone become expert. Okay, or even you now should be a billionaire. Okay, but is that possible? Okay, that's a question we have to ask ourselves. Correct? It's not that simple. Furthermore, there is simply no method in the world that can be simply as to make everyone 100% profit. If there were, as soon as it emerged, it will soon perish. Because if everyone is making money according to this method, then who is the one who lose money? Right? So everyone makes money, nobody lose money. Okay? So think about it. Does that make sense or not? That doesn't make sense, right? Okay. Therefore, we need to learn more advanced methods and theories. We always need to be more advanced than others in order to make the first money in the market. Next, I will explain to everyone the specific differences in the usage of the golden cross and the death cross in the MACD indicator. Okay, I have a question. Everyone know that the golden cross usually represents an impending uptrend. So what is the difference between the golden cross of MACD and the golden cross of other indicators? The difference between the golden cross in MACD indicator and the golden cross in other indicators lies in the fact that the golden cross in the MACD is divided into the golden cross above the zero axis and below the zero axis. Okay? Although they are the same golden cross, but they have different meanings. Okay, let's first look at the golden cross above the zero axis. Generally, when the fast and slow line of the MACD indicator are above the zero axis, okay, the zero axis is the dotted line, the straight line here. Okay, the straight line. Okay, the MACD above the zero axis, it indicates that the stock price is in a bull market. Okay, in a bull market. The golden cross of the MACD indicator above the zero axis often represents a higher accuracy and a continuation of a bullish trend, with its upward momentum often being higher. There is also an implicate meaning that this trading method conforms to the concept of buying in a bull market, which is a trend following practice. Okay, we follow. From the chart, we can see that after the stock produced a golden cross above the zero axis in the MACD indicator, the stock price experienced a significant increase. After the golden cross of the MACD indicator issue a buy signal, entering the market could yield a larger profit margin. It is not important which stock are used, for example. Okay, what's important is for everyone to learn the method. Here I give everyone a task to find some stocks and see the market situation after the MACD indicator produced a golden cross above the zero axis. Okay? You all can go and practice on that. Okay, next. We look at another case. For this chart, I have marked two instances where the MACD indicator generated a buy signal with a golden cross above the zero axis. In both instances of the golden cross above the zero axis in this chart, there were corresponding upward trend in the stock price. We can clearly see that both of these upward trends associated with the golden cross performed very well. We cannot enter any market from the starting point of an upward trend and then sell at the highest point of the trend. When the uptrend is greater, it can give us plenty of time to handle the stock. Even if we only make a profit from a segment of this upward trend, it can still make us a considerable profit. So why do we want to trade in markets with potential greater uptrends? For example, if a stock starts to rise at the price of 1,000 rupees and the increase is 100%, and we make 60% of that increase, we have made a profit of 600 rupees. Similarly, if the same stock rises by 50% and we make 60% of that upward trend, then we actually make a profit of 300 rupees of the price difference. Does this explanation make sense to you, all of you? Okay? Next one. We just talked about the golden cross above the zero axis. Now, let's take a look at the golden cross below the zero axis. Similarly, the golden cross below the zero axis is usually considered a rebound, and its reliability and sustainability in the upward trend are often not as good as those above the zero axis. Okay, let's take a look at this chart. For example, in this chart, there is a golden cross below the zero axis, okay, which I mark here. Zero axis below, okay. You can see clearly that after the golden cross below the zero axis, there was indeed an upward trend. But the magnitude of this upward trend is relatively small. Even you fully capture a wave, the profit is not that much. Okay? This is why we hope to trade in stronger stocks or stocks with greater expected value. Because this represents a completely different profit potential when you get the trend is right. Everyone wants to make money. Am I right? Okay, now we move to the death clause. When it comes to the issue of the death clause of the MACD indicator, there is also a distinction between the death clause above the zero axis and the death clause below the zero axis. Okay? You can see this is above. This two is above. And this one is below. Okay? However, in the stock market, whether it is a death clause above the zero axis or below the zero axis, it usually serves a selling signal. Generally, as long as the first death clause above the zero axis appear, the extent of price adjustment may not be too large, and the adjustment time may not be very long. This means that after a short period, the price may still continue to rise. However, attention should be paid to specific issues regarding the second death clause above the zero axis, which is this one. Okay? This one. Which is whether there is any divergence. If there is a divergence, it needs to be handled with caution. And it is best to sell all stocks. Okay? Divergence is another issue, which I will continue to share with everyone in the near future. Okay? The death clause below the zero axis is also a selling point, a selling signal. However, in India's stock market, which has been rising for the over 20 years, this kind of selling signal is not very common. Moreover, treating the death clause below the zero axis as a selling signal is sufficient. And further research is actually not really necessary. Of course, the death clause below the zero axis has research significance and value in others' market. But I will not share this issue today. Okay? Let's move on to the next topic. Okay. We are talking about the Asia Pacific headquarters. Okay. Okay. Dear fellow friends, okay, I would like to seek everyone's kind attention. And let me share some of my thoughts and feelings. Please bear with me for a few minutes of everyone's time. Okay. As everyone knows, India in the early days, about 20 to 30 years ago, India is not a developed, neither a developing country compared to all other parts of the world. But in recent years, India has slowly developed and become stronger. A lot of big companies are investing in India. They are investing and building their companies' branches or moving their manufacturing factories to India. There's a lot of things now are made in India too. I, myself, okay, born as an Indian also, I also hope that my mother country India can be also a country that I can be proud of. I really sincerely hope and wish India can become one of the top few countries in the world, whether it's in economic or in its development. Even though it might take the next 20 years for India to develop and become better, but at least we can start doing it now. To build a better place, a better country, and a better future for our children and our future generations. I believe everyone here who wants to earn money is not only for themselves, but also for your children's future. Friends, in the past few trading days, we have continuously reaped profits from the stocks hitting the UC limit. Last Wednesday, we earned a 10% profit from the stock hitting the UC limit. And on Thursday, we also earned a 5 points profit from the stocks. Last Friday, funds are also yield a 10 points profit. And there is still a possibility to continue profits tomorrow. As a return, these are all tangible rewards for everyone. Moreover, our profits have remained so high recently. If we could get them all, we will be over 25% of profit from last Wednesday till today. And I just checked, the current result of the contest. The event has reached a very crucial moment. Although the numbers of supporters in India still lags behind Hong Kong. Yes, you guys didn't hear wrong. We are still behind. As we all know, Hong Kong is part of China. And there's a lot of Chinese supporting Hong Kong. That is why they are in their first place now. With the strong support of all our members, the gap has been further narrowed down. And we have great potential to surpass them. I believe that. I have always believed that India is a great place. It's a great country. And we Indians are united. With everyone's support, we can definitely achieve the top ranking in terms of support. Do you all guys think it's very difficult? For me, I don't think so. If India successfully competes for the Asia Pacific headquarters, Petron Ventures India will greatly strengthen its influence, providing better services and more favorable policies for the welfare of the Indian members. If we take the top spot, it will be everyone's honor. And we will also apply for more practical benefits to give back to everyone later. Do you know? Guys, do you know about this? I'll share something with you. When Petron Venture UK decided to step into India market, I myself was actually one of the candidates being shortlisted. I took the initiative to write into the headquarters, to volunteer myself to come to India, just because of one thing. Because I have this very strong feeling in me that I want to contribute something back to India and help India to become stronger and eventually be one of the top countries in the world. I alone cannot save the world because I'm not Superman. Okay? But I know I can use my knowledge to help others. And by helping others, I believe when you guys, all have the abilities, you all also will help more people in India. So, I here sincerely hope every friends in India can give me your greatest support to help to win this contest and allow Petron Ventures Asia Pacific headquarters to be successfully to be in India. This is not only about the achievement of a milestone for myself, but also for India. I hope I can use my knowledge and guide everyone to make more money so that you all have more money to spend on your family and help the economy of India. I express my sincere gratitude to the members who have already supported us, and for those who have not yet supported us, I really hope that I can gain your support. Tomorrow will be the last day. Okay? So please give me your support. Okay. Thank you very much for your time. I always have trust in India, and it's time for India to shine. Jai Hind! Okay, let's move on. Continue. Our stock analysis. Okay, it's time for us to share again. Okay, our stock analysis. In the past 2 days, especially yesterday, the stock market experienced a significant adjustment. Okay, the time affecting many of our stocks. Once again, I want to emphasize that regardless of whether the stock price rise or fall, as long as it's a stock we recommend, we will continue to track and observe it for everyone. Petron Ventures has always been committed to serving our members in the Indian market, and we will track all recommended stocks until the end. Therefore, we have gained the trust and support of our members and friends, and I would like to say a thank you to everyone. Okay, let's take a look at Saregama. This is a daily chart. I will now provide opinions and strategies for all the stocks, okay, that we have recommend. Okay, every member of the India team, okay, my team members, they prioritize their responsibility to their work, including myself, okay. I will actually prioritize when I'm at work. So, some of these stocks, okay, experienced a slight decline last Wednesday due to the downward adjustment of the index. However, I personally believe that the extent of the decline is not significant. As a trader, we have to able to withstand such a slight fluctuation. Okay, it means missing out on some profit opportunities. Okay, I won't dwell over on this further. Okay, let's take a look at Saregama. Okay, the most famous audio entertainment company in the Indian subcontinent. We have always considered it as a good company. Okay, unless there is any major negative events or news, even if the stock price fall, the decline is usually not usually substantial. Looking at this chart of this stock, it is clear that last week there was a price pullback due to the influence of the index. However, by the closing, the stock has risen by around 6%. Okay? Which is not strongly related to today's index rise, but more of the inherent demands for the stock itself. With just one daily candlestick chart, the stock has already returned above the MA10, making the short term more robust. As for this stock, I personally recommend to continue to hold and observe its strength or any weakness in the next 2 to 3 trading days. Okay, the next stock, Adani. Okay, Adani Enterprise Limited is one of the leading trading companies engaged in power trading, coal trading, agricultural products trading. Okay, it is also ventured into solar panels and battery manufacturing. The short-term trend of this stock is similar to the trend of the Nifty index. It also show a large adjustment candlestick pattern on last week Wednesday, followed by a continuous rebound. From a technical perspective, the recent low point coincidence with the previous high, indicating strong support during the pullback process, followed by an upward rebound. Since the high point on the 6th of this month, there has been a complete ABC structure adjustment. Okay, you guys should remember what is ABC. Okay, it means that the downward adjustment from a technical perspective has ended. As I mentioned earlier, the technical support below the stock is very strong, formed by a horizontal trend line created by 2 high points. Okay, which has been formed for a long time and is unlikely to be broken. Currently, the stock price is in the midst of a rebound. Hold with confidence, and if there is any unusual movements in the stock, we will notify everyone at the earliest opportunity. Okay? Okay, next, Kota Bank. Okay, Kota Bank is engaged with in commercial banking, investment banking, stockbroking, car finance, and asset management, and life insurance. The company operating performance is excellent, okay, with all economic indicators steadily rising. Today, the stock price has once again broken through and entered a short-term accelerated uptrend, okay, upward trend. As of today, it has been rising for 3 consecutive trading days, and the magnitude of the recent rise over the past 3 trading days is relatively large compared to the previous fluctuation. From this chart, we can see the upward trend of this stock is gradual, breaking through one resistance level after another. Okay, you see? You can see from here. Okay? However, this stock is unlikely to experience explosive rapid growth, and it requires time to exchange for the space. Today's rise has gradually increased our profit in this stock. For now, everyone can hold it with peace of mind. As for future strategies, we just adjust them according to the real market conditions. It's the same if there's any needs to exit for profit or a certain price point we will inform everyone. Okay, next will be Star Health. Star Health is India's first standalone health insurance provider, with coverage expanding to include health, personal accidents, and overseas travel insurance. It offers customized policies to meet the needs of individuals, families, and businesses. Star Health is one of India's largest private health insurance company. Okay, for this stock, has recently experienced a certain degree of decline, mainly due to market sector, the rotation, okay, rather than the issue of the company itself. From a technical perspective, it's recently tested the technical support level two trading days ago, and is currently in the midst of an outward rebound. We are willing to continue to hold this stock for several reasons. Firstly, based on trading experience, we prefer not to handle stocks during rapid price decline, as there is usually a quick rebound after such a decline. Secondly, the company itself does not have any issues, and the price is at the bottom range, indicating limited downside potential. Okay, therefore, we recommend to continue to hold this stock. As for the current floating losses, okay, I think some of you have also bought this stock. Okay, I personally believe it's not significant. I can assure everyone that even if there is a loss with this stock, I will help to recover it through trading in other stocks. Okay, please rest assured on this matter. Okay, Infosys. Infosys Limited is a global technology service company that defines, designs, and delivers business solutions based on information technology for its clients. The company is a leading provider of consulting, technology, outsourcing, and next-generation digital services, assisting clients in formulating and executing digital transformation strategies. It is the second largest software exporter in India, okay, with a strong financial performance, as evidenced by conservative increase in operating income and net profit over the years. Despite recent negative news regarding orders, the stock price did not experience a significant decline after opening lower today, and instead show some rebound during the day, which can be considered as a positive development. Amid from global uncertainty and micro headwinds, it is a fact that the UK economy has reported contracted in the third quarter, facing the risk of recession. While there is a continued risk of further decline, the stock market trend today show an upward momentum after the initial decline. Considering the current weak industry performance and the possibility of further upward movement, it may be advisable to hold temporarily. But however, if the stock price falls below 1,500 rupees, I believe selling may be considered. Okay? Okay, friends. So our live class has ended here. Thank you very much for your strong support. We will continue our class on this coming Thursday. 28th December 2023 at 8 p.m. I hope to see everyone here. And once again, thank you for all your support and good night.